Well, howdy there, folks, and welcome into this video. Here today, I'm going to tell you guys about 5 stocks I just bought here today and why I bought these 5 stocks, when I think they're going to take off, things like that, okay? Before we get into a lot of the juicy stuff, let's talk about the markets and kind of what's going on out there, little current events here for just a moment. So, kind of a green day out there in the market. Nothing too crazy. Crypto is pretty red across the board. Ethereum, Bitcoin, Solana, pretty much all the cryptos down here today. Gold up a bit, and so yeah, I mean it's a good day in the market. It should be a moneymaker for most folks in the market, unless if you're short the market or something like that, right? If I pull up my watch list of stocks that I have on my Hungry Bull watch list, the greatest app in the history of mankind, Avant shows such strength. It's been really impressive how strong Avant has been. I mean, obviously their last earnings were just ridiculous, in terms of their revenue and whatnot, and they're forecasting this year to just be a tremendous year. So, but at the same time, like, given how bad the market's been, I've been pretty darn amazed to see how strong Avant has been, to be quite honest. So, that's having a great day. Shopify is having a really good day. Baba continues strength. I don't know if you guys saw yesterday, I covered this on the channel, but essentially, the DD situation and I guess you can say the chilling of the Chinese government and coming after a lot of these, basically internet companies in China is a big factor to why Alibaba is moving up and a lot of the Chinese stocks that you're seeing out there. The chef's having a pretty good day here today. That might have been one of the 5 stocks I bought here today. As far as kind of downward movers on my watch list, my Hungry Bull watch list, Stitch Fix, big downward day. Voyager, big downward day, which kind of comes as expected when you see crypto down like that. The hood is now 856. I mean, here's the craziest part. If the hood drops into the 7s, this stock could end up trading. Listen to this, okay? This is going to blow your mind. If the hood goes down to the 7s, the market capitalization of the entire company will be less than the cash they have on the balance sheet. Okay? Think about that for a moment. For Robinhood, I mean, gosh, Robinhood's one of those stocks I really don't want to own, but my gosh, I mean, if you're talking about I can get the company for almost free, I mean, it's pretty darn tempting, right? So, I mean, they got a huge user base there. I'm like, oh my gosh. I mean, literally, if that stock goes to the 7 area, literally the market cap will be less than the amount of cash they have on the balance sheet. It's just literally just like crazy to think about. Honest is down 3% here today. Lemonade down 2%. Beyond Meat down about 2% here today. OnlyFans says it's not seeing a Netflix-like slowdown in subscribers despite rising inflation. So it looks like OnlyFans business continues to be strong, folks. Yes, everybody's switching on Netflix for OnlyFans apparently. Oh boy. SpaceX CEO Elon Musk says an IPO of Starlink satellite internet business is still 3 or 4 years away. Now, a lot of people are really excited for whenever Starlink goes public, but you're going to have to wait quite a while longer. A lot of people are also excited whenever SpaceX goes public, but yeah, you're going to be waiting a while for those ones. I think, Elon wants to get those to probably some pretty good revenue numbers before those ones ever go public, and neither one of those is at that place right now. So if you're talking about trying to get those companies to good revenue numbers, whether you're talking SpaceX or whether you're talking Starlink, you're going to need at least 3 or 4 years to kind of get some real revenues going there. And then I think once there's some real revenues there, I think that would be the time that Elon might want to take things public. But yeah, it's still quite a while away, so don't get too excited about those anytime soon, okay? PayPal users can now withdraw Bitcoin to external wallets. So I saw this. So PayPal, it continues to just innovate, make moves that I think are smart moves ultimately for the long term of their business model. And, PayPal was kind of in the news yesterday because essentially Apple launched a buy now, pay later service, which is, something that PayPal obviously offers, affirms a pure play in that market. And then Square offers, they made a huge acquisition a year ago or so to get in that space as well. Plus there's other competitors. And so, some people looked at that and they're like, oh my gosh, Apple's really coming after PayPal. The thing is like, Apple's been trying to make Apple Pay a big success for a while now. This is not something new. Like Apple Pay's been trying to go down this route and make this a successful service essentially and for Apple Pay. And the thing when it comes to Apple Pay, and I noticed this in like real life, is I personally used Apple Pay. But the issue I kept finding was if I asked somebody, if I was going to transfer somebody money, say you go out to dinner or whatever, right? And I would be like, hey, you got Apple Pay? No, I don't even know what that is. And be like, okay, so I guess you got PayPal? Yeah, I got PayPal, I got Venmo. And so this was kind of it's almost like social media, right? There could be like this social media over here, but if no one's using it, none of your friends and family are using it, like it doesn't serve a purpose, right? And so that's kind of the issue with Apple Pay that I continually found is just a lot of people don't even use it. And I thought, being on your iPhone, I thought that it would be just like an automatic, but a lot of people just still prefer to either use Cash App, which is owned by Square, PayPal, which is obviously owned by PayPal, or Venmo, which is owned by PayPal. And that's just the way it is. So I think Apple Pay will be a success. I mean, it's been out there for many, many years now. But it seems like a lot of people still prefer those other services. So that kind of is what it is. So, if you want to rate the death of Cash App and Venmo and PayPal and things like that, just be careful with that. That's all I'll say about that. Alrighty, guys, time to get into these 5 stocks and kind of why I like these 5 stocks and when I think these are going to go beast mode. First one of the 5 is Amazon. So Amazon bought some shares here today. First off, the stock splits over now. So that was kind of like, I don't want to call it a hype moment for the stock because do keep in mind, this is pretty interesting when it comes to Amazon. This stock price is lower today than when they announced the split, okay? So you might think, oh, that must have been a big boost for their stock. No, it actually wasn't. And we're finding a lot of times it's not a boost for the stock the way it was a year or two ago when it was very hyped out market, right? So when it comes to Amazon, this company's on its way to becoming a $1 trillion revenue company over the next few years, which is just crazy to think about, like an actual company bringing in $1 trillion plus of revenue. They'll be there within the next 3 to 5 years. 3 years probably at the shortest, 5 years at the longest. I think it's probably closer to 3 than 5. But $1.2 trillion market cap on this one here today. Price to sales of 2.6, which price to sales can be a little confusing for Amazon because they have one business that maybe the profit margins aren't the best, which is e-commerce. But if you look at their massive advertising business, that's a great margin business, and AWS is as well. Those are what I call cash flow businesses. And so, a price to sales for Amazon's always been hard to figure out, like what's the right level. I think a 3.5 to 4.5 is honestly about right price to sales wise for Amazon, in my personal opinion. P is about 58 in this company, and keep in mind, like Amazon has so much further to go when it comes to their net income, when it comes to earnings per share, when it comes to margins, all those things. Like, people didn't even start to look at Amazon as a profit machine business until, honestly, this was probably about 5-6 years ago. 5-6 years ago, there started to be a switch in Amazon where people started to look at it as a cash flow machine and a great profitable business model. Before that, people just looked at it as it's just some revenue company that burns money. And so they have such a long way to go for their net incomes. And so, if this is a company that's doing $1 trillion plus in revenue a year, right? I mean, for them to throw anywhere from $100 million to $200 million of net income, I don't think that's out of the realm of possibility at all into the bottom line. And if you're talking about those sorts of numbers, you're talking Amazon's going to command a $3 trillion plus market cap on this company, if not $4 trillion plus. That's where I think this company is going over time. And that's why I'm a buyer of the stock. And it gives me great protection. I think the risk reward is very attractive in this stock. Now, obviously, if the market gets in more trouble, I'm talking about the NASDAQ specifically, and NASDAQ right now is maybe off 25% from all-time highs, something like that. If the NASDAQ was to go down 50%, obviously Amazon's going to get hit. What would I do in a situation like that? I'm going to buy more shares. Like, it doesn't scare me. Like, okay, push Amazon down to $100, push Amazon down to $80. Like, I'll just buy more shares. If anything, I kind of hope Amazon does not go up anytime soon, to be quite honest. I hope this stock stays down. Now, when the market turns, Amazon's going to roar like a beast, right? And it's already starting to make a pretty nice move recently. We don't know how much of that's just the market comeback versus how much of that is, the stock split situation, right? And the fact that it was coming up and maybe some traders getting involved with it. So yeah, very, very bullish on Amazon, not just over, the next year or two, but honestly over the next 3 to 5 years. So love Amazon. I want to buy more shares. I hope it stays lower. The number 2 stock of these 5 stocks is, it's not NVIDIA, okay? It's not NVIDIA, but I just wanted to mention this. I just had to plug this in. Basically, when it comes to NVIDIA, I listened to a conference call last night inside the private stock group because basically for the next month, we're going through like conference calls, and I'm listening to all these different conference calls and reacting to the folks and teaching them kind of what I look for in conference calls. By the way, if you're interested in joining the private stock group, check out the link in the description down there. I might also have it as a pinned comment if you want to apply and join us in there to get access to all those videos and all the curriculum and obviously the Discord chat and those sorts of things. But man, I need to say that Amazon conference call blew me away. It really did. Jensen Huang, that man can sell. The CEO of NVIDIA, that man can sell. It's amazing. So not a stock I bought here today, but I just thought it was worth paying attention to. The stock's down almost 38% year to date. And wow, okay. Now into stock number 2 is Honest, okay? Honest, HNST. This stock's been hammered this year, 61% down this year. I mean, you can't even buy a diaper for $3 from Honest. I mean, this is insane. Stocks just have been absolutely obliterated. Now, when it comes to Honest, I think this stock particularly is going to turn around a lot sooner than many other stocks in the market. This is one that I think is going to start to beast this year in 2022. And let's just go through the numbers real quick. Under a $300 million market cap on this one, under a 1 price to sales ratio. Companies in this industry, they sell everything from diapers and wipes to like soaps, shampoos, makeup. Companies like that usually trade at a 3 to 5 price to sales ratio. So it's ridiculously undervalued right now. Stock price is obviously $3 a share, and price to book on this one of 1.7. When it comes to Honest, and the reason I think this one's going to start to beast in the back half of this year, one, their sanitizing huge numbers they had is all lapping now at this point in time. So that was like an issue for this company the last couple of quarters because their sanitizing business was huge, obviously during Rona, and like people were just buying sanitizer like crazy. Honest sells sanitizer as well, and so a company like Honest was just benefiting massively. I mean, absolutely massively. Well, now that's all in the past. They don't have to lap any more quarters when it comes to that. Also, on top of that, we're having a little baby boom going on, which is going to be great for Honest's diapers and wipes business because they resonate very good with the newer generations like the millennials and whatnot. So I think that's phenomenal. Their beauty business is taking off. Their beauty business now at this point in time is a business that is starting to really matter for the company. It used to not really matter, but it is starting to matter. And I'm telling you, the makeup business, big profits. The beauty business in general, great margin business, much better than diapers and wipes. Diapers and wipes is like good revenue, solid business, but beauty products, that sort of stuff, great margins. And as somebody that owned e.l.f. for many years and still owns e.l.f. Beauty, which is another makeup company, man, those sorts of businesses, their margins can be very darn impressive. Look at somebody like an Estee Lauder and some of the other players, okay? So Honest is in a great position, in my opinion, to build up their margins over the next few years and build up their profitability while also scaling revenue as well and building out their brand stronger than ever. So I love Honest. This is a stock I'm just going to continue to buy. And also in the back half of this year, they have some big deals coming with some of the biggest retailers in the world. And that's another reason why I think this stock's going to start to go beast mode in the back half of this year. So I'm trying to add, my last bits of shares here and as many as possible. And then we'll let the cards fall where they may. Okay, so that's stock number 2. Stock number 3 of these 5 stocks I bought here today is Oatley, Otly. Oatley, another just stock that's been devastated this year, is down 51%. It's come back really strong really recently. This stock bottomed out at about $2.85 just a few weeks ago, and now the stock is $4. That's a pretty big jump, rather quickly here with Oatley, right? Oatley is a $2.4 billion market cap, so they put into the mid category. So 2 of these stocks are small caps. I bought 2, one's mid and 2 are large caps. 3.6 price to sales ratio. This company is growing about as fast as you'll ever find a company growing as far as the drink space, and they're going to be much more than just a drink company, but their biggest opportunity in front of this company is basically replacing cow's milk with oat milk. And as somebody that's done that recently, that's just like it's hard to even put numbers into how big this is. And cow milk has been an industry that's been very subsidized over the years. And, I don't want to say those subsidies will end anytime soon because, the government's going to do what the government wants to do. And if that means they want to subsidize some of these industries, right, that are not necessarily in the best interest of the American people, they're going to do it, right? And so at the end of the day, when it comes to a company like Oatley, they're going to replace dairy products over the next, decade, 2 decades anyways. Dairy's on its way out, in my opinion. We're not going backwards on this. And it's just going to be year after year after year. You're going to have more and more folks that traditionally drink cow milk switching over to oat milk, in my opinion. And oat milk's the first thing to really, and Oatley's the first company to really actually change the whole trend. It kind of reminds me a little bit, it took one company to completely change the way people looked at electric vehicles versus internal combustion engines, right? Electric vehicles, Tesla was not the first company to make an electric car. It wasn't even close. But Tesla was the first company to make massive amounts of people start to consider, you know what, I think I'm going to get an EV over getting, an ICE vehicle. And obviously we're starting to see that play out in the numbers all across the world, right? Well, Oatley's the first company to really, it's not the first company to ever make oat milk, I can tell you that, but it's the first company to make it so successfully and nail the marketing and nail the taste and nail everything, the texture, everything, that it's making mass amounts of people start to say, you know what? Screw drinking cow milk. I don't want to drink that anymore. I want to drink oat milk. They're the first company to really do that in a major way. And they're just going to continue to expand across many different product categories over the coming years. They will flip this business model to be a profitable business model long term. I don't know when that happens. So I'm thinking probably 2024. That's kind of honestly my realistic expectation. 2024 will be that year. Now, in terms of Oatley's stock price, I don't see the stock price doing anything crazy this year, in my opinion, because everybody's still going to look at it as, it's a huge revenue growth company, but they're a money loser and their margins are in the best place. So I don't think the stock price is going to make any type of epic move this year. So I think I probably got this entire year just to load up on shares and load up on shares. I'm a little concerned, though, that maybe the stock could move before that. And the reason being is, I just seen how fast that made that move off 280, right? All the way up to 4, snap of a finger. So that concerns me a little bit. But my gut feeling is this one doesn't really move this year much. And it kind of stays anywhere from $3 to maybe $6, which for me, for Oatley, is kind of a joke price because I'm looking at this stock at being a $20, $30, $40 stock in future years. So I believe I have a good amount of time to just continue to add shares of Oatley. Stock number 4 of 5 I bought here today is PayPal, PYPL. PayPal. This one I've started buying here over the past few months. Stock's just gotten really, really cheap. Year to date, this one's down 54%. P ratio under 30 on this one. Price to book of about 5. Price to sales ratio under 4 in this company. $100 billion market cap. PayPal, Venmo continue to be 2 of the top apps in all the developed world when it comes to the finance category. They continue to fight off competition well. They continue to grow their business. They've gotten caught up into the whole, people are going back out again, so maybe they're not going to use PayPal and Venmo. Well, they're still going to use PayPal and Venmo. It's not the way this works. So they've had a couple of disappointing, probably 2 or 3 of the last quarters that have been a little disappointing. And when you're at the end of the day, when you're in this sort of market, you can't disappoint Wall Street. And so their last 2 or 3 quarters just haven't been that exciting. I think they're going to they have very low expectations now moving forward. And I think they're going to be able to get this business back on the right track in terms of beating numbers and things like that, which is part of the Wall Street game. So, I love PayPal. I think it's just a strong buy for anybody that's looking for a strong risk-reward play. I don't think, as far as the stock price goes, I think it's just going to be a slow, steady mover up over time. I think if the market has some big downward moves, PayPal is going to move down with it. But I think over time, it's just going to be a slow, steady mover up. And the last one of the bunch, number 5, you knew it. It was the Chef, okay? This is my biggest buy here today. What do I even have to say about the Chef? They're expanding all over the United States right now. It's ridiculous. Their SKU expansion, sell-through expansion is insane. Go to your local Target. Look at how many items are now in these stores. The stock's obviously down considerably. And Stephanie and the team has said margins start to improve in the back half this year. And that's when I think the stock price starts to move big. So, Hope you guys enjoyed this as always. By the way, if you didn't get to check out this video here, check it out. 3 stocks I'm buying now, June 2022 edition. That goes very in depth in a lot of different stocks. So anyways, guys, much love as always. If you're looking to join my private stock group, private Discord chat, check out first link in the description down there. Or actually, it'll be pinned comment. Have a great day.